where the bad pianos start to show. Keys all out of tune, just watch them go. Welcome to Adam and Joe talking nonsense on the Outside Scoop podcast show.
Hello, welcome.
Welcome.
Good morning, good evening, and good night.
Depending on where you are in the world.
Where?
Because our audience is England or France.
Yep.
Because it's your kids and my mum.
Yep.
And so there we go.
It is Cumbria or whatever the...
Limoges.
Limoges.
That's it. That's it. So bonjour and hello.
At least we have a global reach.
Well, European
European.
reach.
Oh, hang on.
Oh, hang on.
We're not part of the Europe anymore.
Oh, yeah, but we are.
Welcome to episode 5 of the Outside Scoop.
The Outside Scoop. Brought to you by me, Adam, and Joe over there.
I, Joe.
I, Joe. Well, I, Adam, not I, Joe.
Me, Joe.
Me, Joe.
We had this
Adam.
on the episode 3, didn't we?
Did we? Was it 3?
Or was it 4?
Can't remember.
Couldn't work it out.
Doesn't matter. Still, hello.
Hello.
What are we talking about today then, Joe?
Adam, today...
You tell me. You tell me.
We're going to talk about something we've talked about extensively over the last 4 years, and that is the stock market.
Oh,
and in particular, GameStop.
the screwy world of the stock market and GameStop. What a whirlwind!
What a whirlwind! What a whirlwind
Powerful.
we're in. We'll wind the clock back to January 21.
I was so. You could say I'm still wet behind the ears, but I knew nothing. I knew nothing about it.
Well, what happened in January 21? GameStop, a company in America that sells video games and consoles and...
I think we can preface this a little bit more, actually.
Yeah.
Because the year before was the main year of the pandemic, 2020. That was the pandemic year, wasn't it? And I don't know why, but I have an interest in keeping up with news about gaming.
Yeah.
And that year, every single news outlet was bad-mouthing GameStop.
Yeah.
Because they made all their employees go to work, didn't they, basically? They did all that, and they were making people sell games through cracks in the door. They said, open the door a little bit and throw the bag.
Open the door, give me that crack.
Yeah, that's what they were doing.
So we'll go to that. We will go back a bit further.
Oh, right, okay.
Yeah.
So all I was getting at is sentiment was GameStop. Sentiment in the eyes of the layman were GameStop is a bad company.
So my point is, January 21, the stock went from trading to about $4 to a high of over $120. Pre-split, it was over $400, but the stock has since been given a 4-to-1 split. So it was trading from between $4 and $120 within the space of a month. That happened. And why did that happen? We'll go into a bit more detail.
We'll go into a bit more.
But we'll wind that clock back even further.
I don't think we can pretend to actually know the facts here.
No, but we're
going off of many different sources.
No one really knows.
No one knows.
Apart from the people that committed the crime.
The crimes. yeah. Nobody knows except for those.
Yeah, we'll go back further. So, GameStop, yes, a company that was selling physical media in physical stores.
Well, games and toys, basically. Well, not toys, but memorabilia.
Collectibles.
Funko Pops mainly, I think, from the impression I get.
Bits
Crap
and pieces
to do
like
with
that.
games that you don't really need.
And the company was very much being run into the ground. And
extract that profit.
Hedge funds, market makers, investors, whoever you want to call them, could see the writing on the wall. GameStop was slowly going bankrupt. It was slowly going bankrupt. It was losing revenue year on year because who's going into stores to buy physical items now that you can go and buy them online or download games or whatever?
Yeah. There is no need to.
Yeah.
Unless you want that disc. But the problem is, from what I can understand, the disc is just your license.
The disc is nice to have. It's and you haven't got to spend hours downloading either, have you?
Yeah, you do.
Do you?
Yeah, because the game is still online. That's the thing. That
I just think there's some games. I don't think it's all games.
Most games.
Like, depending on how big they are.
Yeah, I haven't got any games that you put the disc in and it just plays anymore.
Think about the Switch. You got everything's on the cartridge, isn't it?
Well, the Switch is a different console.
Yeah.
The Switch is a different thing, isn't
Yeah.
it? But if you're on PlayStation or Xbox, I haven't got a single. I don't think I've got a single game that isn't online.
Yeah.
Or downloaded from online, and the disc is just your license. That's all it is.
Yeah.
For those, well, nobody can actually see us, but I've just watched Joe take his cup of tea from his left hand, put it into his right hand, nearly put it on his notepad, didn't put it down, and then moved it back to his left hand.
And then I'm thirsty. So it was a dying company. The management were running it into the ground. They were buying things like private jets, running expensive leases on warehouses and stores.
Which anybody would do.
Issuing dividends when they weren't profitable. And just extracting that money, extracting my money. My point is, the hedge funds were right.
Yeah.
The company was dying.
It was dying.
Short the stock. What does shorting mean? It means you take a stock.
You borrow a stock from a previous investor, don't you? Somebody already owns it. You borrow the stock from them. I'm just laying the groundwork, because when you say you take a stock, the first question I always get is, where does that stock come from?
So you've got a stock, Adam.
Yeah. Say I'm an investor in Gamestop and I've got 10 stocks.
You've got 10 stocks. I'm going to go to you and say, can I borrow those 10 stocks?
And I will say to you, yes, you can, but for an interest rate of 10%. I want £1 for every year you've got them.
Not a problem. So I take those stocks. I take those 10 stocks. I borrow them. I then immediately sell them on the open market. Selling a stock puts downward pressure on the price.
Apparently. That's what we're told.
No one really knows who sets the price.
No.
And so I borrow that stock. I sell that stock. The price goes down.
With the hope that the price goes down.
And the idea is that I borrow enough stock.
Yeah.
I'm not borrowing 10. I'm borrowing millions and millions of shares.
Yeah.
To dump on the market, to sell,
yeah,
to drive the price down.
I think the layman's way of explaining it is, you've borrowed 10 stocks off of me that are worth $10 each. So you've got $100 worth of stock.
Yeah.
You've sold that back to the market.
Yeah.
The first year you owe me £10.
Yeah.
So that comes to, or $10. Was I using dollars or pounds? I can't remember.
Whatever.
So you give me my $10.
Yeah.
For the first year interest.
Yeah.
You then sell that back to the market. You then, by selling, would hope that the price would go down.
Yeah.
And it involves other things like market sentiment, company.
There's a whole thing. There's a whole thing about shorting stock.
That's it.
If you're a big
and then
player.
if the price goes down, Joe will then theoretically, let's say it goes down from $10 to $4 a share. So now Joe buys that back at $40, gives the stock back to me. So let's say it's a year later, gives me my $10 interest. So I've now earned $20 out of a stock that's lost money. Joe has theoretically now earned $40 off of that stock.
$60.
No, because you gave me 20.
Okay. Oh yeah. The
So
interest.
you gave me 20 in interest, and what you've done is you've realised the profit.
Yeah.
You've realised the $40 profit out of something you didn't have any money before with.
Yeah.
That's it, isn't it?
Yeah. So I borrow it.
But in millions.
Millions.
Not in 10 stocks.
No.
In millions of stocks and billions of dollars.
Yeah. So I borrow $1 billion of stock off you. I sell it for $1 billion.
Yeah.
The price goes down. Doesn't even have to be that extreme. It doesn't have to go down to.
It could literally go down a couple of bucks.
Yeah. So I sold it at $10 a share. I buy it back at
$9.50.
I buy it back at $9.50, and I pocket that 50 cents difference.
Yeah.
And you take that over a million shares. It's a chunk of change.
Chunk of change. That's some valuable wealth right there.
Chunk of change. And what people do that are market makers, hedge funds, investors that are shorting stocks, they'll then go on a massive campaign.
Yeah.
Because
it's just market sentiment. It's just how do we feel about this company? That's all it is.
And you'll see it in the newspapers. This company's doing this. This company's doing that. It's bad for employees. It's bad for you. It's bad for your health.
Bad for you. Don't use them.
Don't use them. And sometimes, and quite often, it's successful. It's easier to make money by selling stuff rather than buying stuff.
Well, exactly. It's easier to make a company go down than it is to go up.
Yeah. So that's what shorting the stock does, and the hedge funds were right. It was mismanaged. The company wasn't going anywhere. It didn't really seem to have a future on the horizon.
Well, in 2020, it did seem like a dead company. Well, it did to us. Well, we're not Americans, so we don't know. But
But
it definitely felt dead.
And then what happened? It all changed.
Changé.
All changed. A guy called Ryan Cohen, who created an online company selling pet food, sold that for a few $1 billion, and then he had some money to go and invest in companies. He identified Gamestop as a turnaround opportunity. He felt it was undervalued, and he purchased something like, I can't remember the numbers off the top of my head, but let's say 8% of the company. He purchased 8% of the company in 2019, early 2020, something like that. And with that, he became an activist investor. He wrote to the board, said, "You're doing it all wrong. This is what you should be doing." We don't need to go into the details, but he said, "You're doing it wrong. I want to change this company around. Let's make it happen."
And they did resist, didn't they?
There's a little bit of resistance, but he was a big shareholder. And he eventually got his way. And what did he do? He changed the board over. I'm skipping over some bits here, but he changed the board. He brought in his own guys from Chewy, which is the company he founded. He brought in some
to get you going.
Big, powerful executives, and started changing GameStop. This was still before anyone really knew what was going on. A chap called Roaring Kitty on YouTube. DFV on Reddit.
Yeah.
He
did
saw the
well,
moves. He saw the moves. He saw Ryan Cohen buying into the company.
A genuine bit of intelligent investment there. Whatever your views may be, whatever direction you may think he was going, he made the best moves.
Yeah. He got in early. He bought $50,000 worth of options. And for anybody that doesn't know what an option is, it's a contract to buy or sell a stock at an agreed price. So if you are buying, and options I think are a very important part of what's happened here. But options, let's say the stock is trading at $2 at the moment. You're going to buy an option to say that the stock is actually going to be trading at $4 in 6 months' time. You buy that contract, and you're buying hundreds and hundreds of shares. I promise to buy those shares at $4 because you think the price is going up.
Oh, more.
You think the price is going up. So the idea is that in 6 months' time, when the price has gone up to $4, and it's even higher.
Isn't it the idea that the price has gone beyond the $4?
Yeah, so it's gone to $4 and beyond.
Booked yourself a discount.
You can then, so let's say the price gets to $6.
Hoping the price hasn't gone the other way.
Hoping the price hasn't gone the other way, but you believe it's going up, so you bought these contracts. So you can then buy hundreds of shares at $4 a share when the market value is $6. You have then made a profit.
And these contracts. These options are taken out with is it the hedge funds or the market makers?
Market makers, hedge funds.
So just with anyone.
Between you and me.
Right.
I could sell an option.
Right.
If I had the stock.
Yeah.
But then we can also talk about naked shorting.
Oh my God.
Where you don't have the stock, but you sell the option.
You do it anyway.
That's something else.
So it's quite a big bit of this as well.
So he brought options saying I think the stock was going to go to $12 or something like that in January 2021 or something along those lines.
It was early 21, wasn't it?
And
or was it 20?
21.
Right. Okay.
Yeah, 2021. So Roaring Kitty brought some options saying the stock's going to go to $12 because there's going to be the new PlayStation release, the new Xbox released, all this sort of things happening. GameStop's going to have a little moment where there's going to be some good revenues coming through the stores because of all this new stuff coming out. So he believed the stock was going to go from $2 to $12, and he called that deep value.
Deep value.
Deep value.
Deep value.
And he posted this also on Reddit, and he got ridiculed, as you would. This was a dying company.
It's Reddit as well.
It's Reddit,
isn't it? Everyone's wrong.
Everyone's wrong, and the company started. It didn't start making money. Well, it did start making money, but no one knew it was making money because the quarterly results weren't out. You don't know the quarterly results until.
We also suspect that that market sentiment and public sentiment was negative because it's believed that, you know, market makers had insiders there, wasn't it?
Yeah. So the price in December started going up. I think once news got out that Ryan Cohen was taking charge of GameStop, the price started to rise.
That's so exciting.
And as the price started to rise, it wasn't going up loads, but this guy started making bank.
Yeah.
He would post updates. Oh, I've made $10,000 today. Oh, I've made another 10. Oh, I've made 20. I've made $100,000.
Kitty you're talking about?
Yeah.
Yeah.
And people are like, no way. And then other people started buying into stock, started buying options. And it slowly mothballed from there.
It definitely did that, didn't it?
Yeah.
It definitely built and built.
Yeah. It built and built. The price was going up. And within the space of a couple of weeks, this Roaring Kitty guy started making millions. Millions and millions. He hadn't realised these profits yet.
No. It was all on paper.
All on paper. But he'd post an update.
More money.
Plus 12 million. Plus 24 million.
Imagine that.
Plus 50 million.
I think I struggled to hold it like plus a tenner.
Well, I made like 30 cents the other day, didn't I? Look at those profits. I sold.
Sweet gains.
And so everybody was getting on board with this.
Yeah.
And I think this price rise we saw in January, I think a lot of it did have to do with retail investors.
I don't think it couldn't have had anything to do with it. It has to, if the way that the market works is to be believed, it has to have had a lot to do with retail investment because we were all buying.
We were all buying. I don't think it's millions of people, maybe 100,000 people across the world.
It wasn't as many people as others would hope.
No, I don't think millions and millions of people.
Because, you know, things like this, they're very insular.
Yeah.
Just by their very nature.
Yeah.
You know, it takes a certain kind of person to grab onto a bit of a rave train and go with it.
But still, let's say 100,000 people around the world were doing this, which I don't think is a big stretch. It's a few thousand people in each country, which I think is easily identifiable.
There's a lot of people.
And everybody was buying. It wasn't just GameStop, it was AMC, it was Nokia, it was BlackBerry.
What they call them, the meme stocks.
I think there's COS, there's loads of stocks. BBBY. Loads of stocks, and everything in January 21 was getting squeezed. Pumped. People, it was mania, I think.
Oh.
Absolute mania.
It was great fun though, wasn't it?
Everything on Reddit.
It was great fun.
Twitter.
It was like
Instagram. Facebook. YouTube. People were posting how much money they were making.
Yeah.
And it seemed like it was never going to end.
It happened at a particular time in life, in history, didn't it? Because we were coming out of what we thought was the end of a pandemic that none of us understood. None of us had ever had anything that major ever go on.
Yeah.
So it was a real, like, I don't know how to describe it. Not let's watch the world burn, but I think there was a bit of that in there.
Yeah.
And it definitely felt like for a lot, because a lot of people got screwed over.
Yeah.
And it was like, right, finally my redemption's here.
Yeah.
You know, my child, especially in America, in England, we didn't have it, but you definitely got the impression that in America it was finally, here's my redemption.
Yeah, here's my redemption. I'm making money, and people were just chucking money at this thing.
They were lobbing it,
and they're making money. They saw the price go from $4 to $8, from 8 to 16, from 16 to 64 to 150, and it was going up and up and up.
Anything more than a 10% gain is a lot, isn't it? So if you look at a stock and you put that tenner on it, and you get $1 back, you're like, bloody hell, I got $1 back on that. That's like per share. That's good. But then, once it goes to 100%, 200%, 300%, it's all bets are off at that point.
All bets are off
because like we didn't understand it,
and everybody was saying, $120. That's now the target. That's now the target.
Yeah.
It was like, no. And then it was 120. And then like, right, now it's 180.
Yeah.
And then it went to 180. And then it went to 2, and then it just kept going up and up and up and up.
It just kept
and
going.
It just felt like it was never going to end.
It felt like the system was about to break.
Yeah.
Didn't it? It felt like, oh, right, this could be the end of capitalism. Bear in mind, we're talking about one stock.
One stock.
We're talking about one stock and a few meme stocks
Yeah.
after it. But
Yeah.
GameStop really was the leader in it. For us, anyway.
For us. And it really went high. And I don't want to use the word short squeeze, because I know there's online communities out there who believe it wasn't a squeeze, it was a sneeze. But we'll get onto that later on. But the price went up and up and up and up and up.
That's the main thing.
And
the
then
main thing for us is, this price is going up.
The volume,
watching other things go up as well.
Yeah, the volume went up. You could see the shares, millions and millions of shares being purchased.
And the idea was, for me, I think you probably agree, is that, as we said earlier, there was probably not that many people involved. 100,000, couple of hundred.
Yeah.
There wasn't millions of people involved.
No.
To see the market move in the way that it did on such low pressure was the thing. I think that was the, hang on a minute, if everybody opened up an account and pushed this, like, we will just watch. Let's just watch the world burn.
And the world nearly did burn, I think.
Well, it from that perspective, it definitely felt like it could have done.
Because when we got to $300+ on this stock,
That was absurd.
sending the company with a market cap in the hundreds of millions to the billions, that is when the people who are in charge sat up, started paying attention and going, hang on,
about to collapse.
Things are about to go turbo here. Things are about turbo. What are we going to do? Right, this is what we're going to do.
Shut it down, boys.
Shut it down. We're going to stop you buying this stock.
Yeah.
And that's what they did.
And
the open and fair markets during those weeks in January were not open and fair, and they're still not, and they never was.
That's the thing.
Yeah.
I think the thing to understand is, for me, what I've taken from it is that, that they definitely stopped the buying. The reasons why they stopped the buying, I sometimes think are a bit more mundane. That literally they just didn't have the money to do the buying. Like the retail apps, what are they called?
The brokers.
The brokers didn't have the money to, because the systems, we know the systems are old, because the NASDAQ runs on bloody Windows XP or something nonsense, doesn't it? But yeah, it was stopped. For whatever reasons, fair market wasn't a fair market at that time.
They stopped the buying because they couldn't buy the shares. They couldn't buy the shares anymore, and they didn't want to be buying them at those sort of prices.
Yeah.
The shares weren't available. The prices kept going up.
Yeah.
And these brokers would have been left on the hook.
Yeah.
And they didn't want to be holding the bags.
And the reason why they're being left on the hook is because there's a screw in everything, isn't there? Everyone's got a screw, which means somebody has to lose.
So they decided to stop the buying. You couldn't buy any stocks anymore. And the second you can't buy anything, you sell it.
Yeah.
And you start selling it. And it was being sold.
Yeah.
It was being sold by hedge funds,
huge amounts,
retail investors, because he just couldn't do it. I remember when it happened. I was on Wall Street Bets following it along. I was on their like live chat or whatever it is, seeing people saying 140's not a meme, 180's not a meme, we're gonna hit this, we're gonna hit that. And then people started saying they couldn't buy anymore. They wouldn't be. I'm not allowed to buy anymore. I'm not allowed to buy anymore.
Button.
And then Wall Street Bets was kind of the heart of all of this. It was the centre of it was the beating heart of this frenzy.
Yeah.
Because that's where everybody went.
Don't know, Wall Street Bets is a Reddit forum.
Yeah.
But there's a lot of people on there.
Yeah. Well, the Reddit forum itself went from, I don't know, a few 100,000 to like 7 million subscribers.
Yeah, absurd amounts.
It just went. That too went mental, and during this time, that sub got shut down temporarily. Not only could you not buy, you couldn't communicate with anybody.
You see, when does that happen? when the lines of communication go, that's when you know you're onto something.
You had to go onto Twitter, which is a mess. So you had to go into like other things to see what everyone was doing.
Yeah.
And
Yeah, when they cut the lines of communication.
And I was like, Christ, what's happening here? This feels really like what's going on, because
like something.
You're not allowed to buy the stock anymore. On the big brokers, smaller brokers you can still, but the big brokers like the Robin Hoods and the I don't know 212 were they allowed
212 stock buying on it.
And there's others.
When they did,
when they stopped allowing you to buy and put it into a close only position, and then you couldn't talk with anybody on like Wall Street bets.
That's the thing, isn't it? That's the thing.
They're trying to panic the market.
Yeah, that's the thing. Like, why Reddit is meant to be open, isn't it? Reddit is meant to be open and moderated by its users.
And I think what was interesting,
all of a sudden, someone shut it down.
I think what was interesting was a chap called Thomas Peterfree, I think he is. He's the founder of Interactive Brokers. He went on TV sort of in the days around this, and he was having an interview, and he said it had to be shut down. He was quite angry about it because retail investors were winning, and he's a multi-million billionaire who's
because of retail investors. Yeah.
So he got quite angry about it. It's like, it's ridiculous. The stock shouldn't be this, and retail investors are nuts, and why are they doing this? And he said the stock was going to go to $1,000 if they didn't shut it down.
That's a man on the inside.
And I think a lot of people were thinking that this stock's going to go to $1,000, and I think a lot of people had that in their head as the sell target. As the sell target.
I think so. Yeah.
And it just didn't happen. The plug got pulled. The stock went.
It was also like the weekend killed it as well, didn't it? Like, there was so much hype on that Friday close.
Yeah.
And then we got to the weekend, and that's when Reddit was shut down, I think.
Because
over the weekend.
It was I can't remember the days,
but
it was all around the same time.
It all needed building back up again.
Yeah.
And denying it was a hype train, but what a place to be.
Yeah, it was fun. There was a lot of hype around it, and the stock did go to high numbers.
And there were no answers. That's the other thing. That's the biggest thing that I found, is that if something, if a building collapses, the first thing that BBC News do is get on a building surveyor, don't they? They'll get a structural engineer, or they'll get somebody who knows how buildings are built.
Yeah.
And then go, right, why did it fall down?
Yeah.
And then they can explain what happened.
Yeah.
We've never had that.
No,
we've never had somebody who's within the industry, who understands it, go, right, this is what happened.
And the reason why is because it is a self-regulated industry.
Yeah.
Regulated by themselves. They have oversight from various government bodies.
Yeah,
but these government bodies don't have any power.
And the fines, the way that you know they don't have any power is the fines.
Yeah.
These firms will make millions of dollars on bent deals, on corrupted systems. And, like I said, they'll make millions of dollars, and the fines are $100,000, couple of $100,000.
It's just the cost of doing business for them.
That's all it is at that time. It's just like paying your income tax on it.
Yeah.
That's all it is. It's just the government going, well done, give us our cut.
And during this time, so there was Congress meetings, there was politicians get involved, and everyone's trying to figure out, A, why did you stop the buying? Why did the price get so high? What's next? Were kind of the three key things. GameStop didn't say anything. Management said nothing. Directors said nothing. There was no comment. Still no comment to this day.
Still no comment.
What is happening? What happened to their stock, their price, and what still continues to happen? And that is what I find is really interesting. At the start of this whole thing, I never invested more than £1,000 into any stock.
Yeah, I was probably 10% of that.
Yeah,
about £100.
My largest investment ever was it was about £1,000, and it was in some cannabis stock in Canada, and this was before it was even a thing, and I actually made some money on that.
Wow.
Before the hype and everything.
Nice to make some money.
Yeah, it was. I bought it, I left it, I forgot it. I did what you're supposed to do.
Yeah.
Buy and forget.
Forget about it. Leave it.
And I made some money on that.
Come back to it in retirement.
And then I had some other investments, like a few $100 and pounds in this and that. And anyway, so I got into the hype of it, thinking get rich quick, as we all do. But yeah, GameStop never said anything.
It just kept quiet.
They kept quiet, and what they did do was take advantage of the situation and sold some shares. And they raised $1 billion in cash.
It's insane, isn't it?
$1 billion.
That's how much buying was happening.
And with that, the company changed overnight.
Yeah.
It had no debt.
Got rid of all of its debt.
Had $1 billion in cash. It has Ryan Cohen leading a turnaround program.
Yeah.
These things take time. The big ships take a long time to turn around.
Of course they do. You can't just do it overnight.
But this is what GameStop have come out with. This they've gone through this, and they've got $1 billion in cash. They've reduced all their costs, and it's a very different company to what it was in 2017, 18, 19.
Well, that's what we're led to believe.
And it's something which we'll pick up in part 2.
Yeah. Yeah.
Because GameStop's a different thing to what we're talking about now.
Yeah.
What they're doing is different to what happened in 21, where we saw market manipulation, people not being able to buy anymore, people losing hundreds and thousands of dollars in some cases.
A lot of money. But
because,
we'll talk about that.
Because they couldn't, because the buying pressure was turned off. That's what happened.
Yeah.
Was there some greed? Yeah, there was some greed. But if they just allowed the market to play it out, then
they should have
be a different story altogether.
They should have just let it. I don't know. Should they have let it continue? Shouldn't they have let it continue? Would have been nice if they had done, wouldn't it? Would have been nice for all of us.
We've all had a nice little drink out of it.
Just little wins, isn't it?
Yeah.
But then, you know, the thing for us is we jumped on the train when it was at, 80% of the way there, didn't we?
I think I first bought in something like when it was $17, $18 or something like that. Yeah.
Oh, that's not too bad.
I remember I bought it on the Monday, and I think I told you on Wednesday or Thursday about it.
You mentioned it to me, yeah. And I bought in on the Thursday evening, I think.
Yeah.
Yeah.
But there's still gains to be made there. Anyway, there's more to talk, and I think we'll turn this into a series.
Yeah, I think...
The next episode's not going to be about this. Next episode we'll talk about something else.
Yeah,
but
we'll drop this in. This will just be...
Yeah, this is going to be a longer...
This will be sprinkled.
Yeah, we'll do a little... what do they call it? Playlist?
Series.
Little playlist?
Little series of it.
Yeah. This is part 1. I think there's probably 3 parts here.
Yeah, I reckon we've got our first little series.
We've set the stage.
Yeah, all right, we'll speak to you next time.
Okie dokie.
Where the bad pianos start to show, keys all out of tune, just watch them go. Welcome to Adam and Joe talking nonsense on the Outside Scoop podcast show.